Hey guys, welcome back to Crypto Serious. So today, early in the morning, Bitcoin already touched $119,000. Back on September 29th, I told you guys very clearly, if Bitcoin could reclaim $113,200 on the daily and hold above it, you should completely drop the bearish mindset. Because naturally, the next stop would be $118,000 to $119,000. And now, that level has been hit. So the big question is this rally done? Was this just Bitcoin grabbing liquidity at the top before another dump? Well, I already mentioned in earlier videos, around $118,000, longs should start thinking about taking profits. Whether you flip short is another matter, but at least partial profit taking is smart. Why? Because this $118,000 zone wasn't just a Fibonacci 0.618 rejection area. It was also the mid-range of a past consolidation. A lot of traders got trapped here before. So when Bitcoin ripped above it with a daily engulfing candle, closing right around $118,000, that was already a sign of heavy resistance. To me, seeing rejection here is actually normal. So if you've been holding longs into this level, this is where you should think about trimming, or at least set your long-term stop loss. For long-term players, the defensive stop should now sit around $113,200, which is the base of that big daily bullish candle. Any daily close back below there, and this bullish case is done. Now, let's talk about why this zone is so important. That daily candle was not just bullish. It potentially confirmed a W bottom formation. The bounce came right at a Fibonacci 0.618 retracement, combined with a 3-touch trendline support. That triple touch trendline added weight to the bounce. So if you actually project this W pattern with a 1-to-1 target, you get a mid to long-term upside toward $127,000. But, of course, stops must stay in place. Personally, I wouldn't be adding new longs up here anymore. If you were in earlier, great, protect profits. If not, you wait for the next setup.
Now, what about shorts? Well, last night we already saw a fake breakout on the hourly. Price spiked, got rejected, then engulfed back down. But then Bitcoin made a new high anyway. So, when shorting, you don't just blindly fight strength. The conservative approach is to wait for a double top rejection. In other words, if Bitcoin pumps again, fails to break the first top, and then rolls over, that's your safer short trigger. For now, the market's focus is clearly on this $118,000 level. If Bitcoin consolidates here and breaks higher, we could extend toward $120,000. Around psychological level and likely where bears will cluster their stops. Let's also take a quick look at the Bitcoin to gold ratio. Notice how it bounced right from its own Fibonacci 0.618 support. This tells us gold money is actually starting to rotate into Bitcoin. Both are trillion-dollar markets, one physical gold, one digital gold. So if Bitcoin can consolidate and push higher, this could mark a major capital rotation point. Now, moving on to Ethereum. Ethereum is already pressing into its upper resistance zone. If it were me, I wouldn't chase longs here. Why? Because Ethereum often chops harder and usually gives you a pullback entry. Remember this chart I showed before? Ethereum has this habit: consolidate, fake breakdown, reclaim, rally. We even called the last golden pit at around $3,960, a Fibonacci 0.618 support. That was the left side long entry. Since then, Ethereum has already rallied about $400. Now, at current levels, I expect resistance. If it pulls back, I'll be watching $4,260 as a potential buy zone. And bigger picture, if Bitcoin is making such a strong move, Ethereum should at least retest its higher trend line. That's around $4,570. Also, structure-wise,
Ethereum looks like it's forming a head and shoulders bottom or a rounded base. If you measure 1-to-1, the conservative target is around $4,450. That's the mid-resistance zone, and I expect some chop there. So if you're in longs from lower, you can already move your stops up to $4,060 to lock profits. If we get a pullback toward $4,260, that could be another opportunity. All right, guys, that's it for today's update. If you found this helpful, don't forget to subscribe to Crypto Serious and follow me on Twitter for more real-time updates. Catch you in the next one.